Good afternoon. I'm Evan White. I am the Public Relations Manager at Employbridge, and I'm joined by Joanie Bily, as always, the Chief Workforce Analyst with Employbridge. Joanie, how are you today?
I am doing great, Evan. How are you today?
Doing just fine. And so for folks who are new to the program here, this is the EB Economic Brief, and we do, well, a couple of things. We look at the latest numbers from the jobs report that came out back on Friday, but we also kind of look at the week that was in labor, because it's not just the jobs report, Joanie. Obviously, it's the JOLTS report as well. It's the ADP report, and there's various other drips and drabs of data that come in that we want to get to across sectors. So if you would, for folks, again, who haven't joined before, just the significance of the jobs report, and then we'll take a look at the stories behind the numbers here.
Yeah, thanks, Evan. Last week was a big week with lots of economic data that was reported. Certainly the big report was the Friday jobs report, taking a look at the January numbers. But these numbers are so important. They really are a great indicator to what's happening, with the economy. And we dig into all the numbers. I know we're going to do that today in this economic brief, but lots of interesting trends. And, it does get a bit confusing trying to make sense of it all because, for example, ADP came out last week and was, kind of right around what expectations might have been, maybe even a little bit less. We were expecting 180,000 jobs for the January jobs report for BLS, and then had a blockbuster surprise, right? The job numbers really soared, and we saw 350,000 jobs created in January. So lots of data out last week. I know we're going to get into some of that today, but that's why we do these, LinkedIn Lives, just to kind of share the information, take questions from our audience, and try to make sense of all of this interesting labor market data.
Yeah, it's a couple of days after that last big report that came out. So a chance to breathe, take it all in, and analyze the numbers and really all that's going on, because as you mentioned, there's a lot to sift through. But this isn't just a conversation between us. This is an opportunity for folks who are watching us on LinkedIn Live to go ahead and put your questions there in the comments section. We're going to get to them at the end of the program. We're going to keep it short. It is the brief, so we will keep it brief. And we're going to dive into that right now as we look at just a couple of slides, looking at some of the key numbers here from the last report that came out again back on Friday. If we could just pull up that presentation here for the brief. The first number really unchanged there, Joanie, the unemployment rate. What did you notice there?
Yeah, it is interesting. We were expecting that number could tick up to 3.9%, possibly even 4%. But unemployment is really holding steady at that 3.7%. So just a little over 6 million unemployed workers. We're watching that number, though, very closely. Also in the news, we are seeing layoffs from many companies, not just the tech sector. So multiple layoffs, have been announced over the last few weeks. So we'll keep an eye on that number and see if it starts to tick up. But for right now, it's holding pretty steady.
And another one that was fairly steady, the labor force participation rate. Thoughts on that one?
Yeah, so I do love to dig into labor force participation, to really see how many people are actually raising their hand and saying, yes, I want to participate in the workforce and, be an active contributor, to the labor force in the United States. A little bit of a concern is that we did see about over 100,000 people opt out of the labor force. But because we were adding, there's a few things that go into this number, certainly the population and how many people are employed. We've really been holding steady, with labor participation. But the one thing that I watch every month is are we seeing more people come back into the workforce and say they want to participate? We are seeing that trend start to increase for women. However, we are seeing men opt out. So, really have to pay attention to these numbers. Right now, there are a tremendous amount of incredible job opportunities out there, still in many different categories, and we'll get into some of that today. but I do tell people all the time that, it is a good time to participate in the workforce. And if you're looking for work, opportunities are certainly out there.
Another good reason, rather, that it's a good time is we look at the next number here, the average hourly wages. They're up 19 cents. How significant is that in the grand scheme of things? I know they've been up about 12 straight months.
Yeah, that was a surprise to me, Evan, because I really felt like we would see a little bit more stabilization with wages. And I think that particular number speaks to the strength of the job market. There is still more demand for workers today. We can see that in the JOLTS numbers that came out. That was revised upward. So online job postings are about 9 million job openings out there. And we're seeing that employers are still having a difficult time hiring people and getting people on board. We have 6 million unemployed workers, 9 million openings, certainly, more jobs than there are available people. And then when you get into the highly skilled jobs where there's such a demand for specific experience and talent and expertise, companies are still having the challenge of finding the right workers. So that is driving wages. And we certainly saw that in this last report, really some strong growth. It was up 4.5%, which was quite a bit more than what was expected.
And the final number on here, the jobs added, you mentioned it just a few moments ago, 353,000. I know that's a huge number, and you mentioned it's a big surprise to see that for January. But every month we chat about it. The revisions come in usually, and that comes down a bit. As we look at that number, I mean, do you look at it with some cautious optimism, or how do you view that?
Yeah, so this was a big surprise to see this number. And that is the headline number, right? So we always break it down and say, okay, well, where are those jobs? Where, are sectors adding to their payrolls? What industries are hiring? And so when you dig into this number, it actually was a very strong number, and the job growth was spread out across really all sectors. What I was very pleased with was seeing that the professional and business service jobs actually came back, added over 70,000 jobs in that sector, which was very strong. Because over the past few months, we have seen that the job growth was really just in healthcare, government, and leisure and hospitality. But that was not the case for the January jobs report. We saw job growth really in all sectors across the board. And that to me shows some real strength of the overall job market.
We can take a look at some of those growth sectors now in the next slide here. You mentioned professional and business services up 74,000, then healthcare, which continues to be strong, as you mentioned, retail and trade and social assistance. What are some of the other nuggets that you could pull out of these from what you saw in the jobs report and otherwise?
Yeah, we did have some, job growth also in construction and manufacturing, though still smaller numbers. Those are sectors we continue to watch and expect that there'll be future growth coming from those sectors as well. Maybe the surprise was that leisure and hospitality only added about 11,000 jobs for the month. This has been a sector that, just a few months ago was adding, 40, 50,000, a year ago, 90,000, so a very, very strong sector that did kind of, start to slow down a little bit. But overall, the temporary help sector actually added 4,000 jobs. And that is a great sign for the economy because we have been losing jobs in the temporary help sector for many months. And that shows us that maybe we are going into, a recession or a slowdown because employers will always let go of their temporary workers first. So when I looked at the revisions, there was revisions made to the prior months. We still were at a negative of jobs created in the temporary help sector. But in January, we may have turned the corner and starting to see some of that growth come through. And that also would be a good sign.
And social assistance, the final one, I know that is an area that has been gaining jobs. Significance of that in your eyes?
Yeah, social assistance and healthcare, again, are sectors that, we have seen job growth added. When you dig into those numbers, some of those positions might be on the lower end of the pay scale from hourly wages, but the jobs are there and they are coming back, and there certainly is a demand in that area, and it's expected to continue into 2024.
All right. And I mentioned earlier, Joni, that this is a chance for folks to ask questions. And we've got a couple of questions and comments here in the chat. So we'll get to that right now. One of them coming from Mike in Montgomery, Alabama, said he's interested in knowing about the labor participation rates and the impact on the supply of more jobs compared to the demand to fill them. He also wanted to know the main reasons why people are not filling these jobs at this point.
Yeah, so I'll start with from the labor participation rate side. This is something that certainly we watch closely. If you look at prime age labor participation, it really is at like historical highs. So that when we look at those numbers, it's, ages 25 really through about 55. Most people that are able to work are participating in the workforce. When you start to look at, younger than 25, maybe they're still, in college or school, it does drop down. And then we've also seen over 55 years or older, we're starting to see people opt out of the workforce. And there are some trends that certainly the pandemic impacted those numbers, from women staying home, some, men and women taking early retirement. That did impact overall labor participation. So it does make it more challenging, when we do have a strong job market and millions of open jobs and not enough workers. That's really what will drive wages up, because companies are really challenged to get people back into the workforce when labor participation kind of caps out or just stays stagnant. So it is a challenge, but we certainly can encourage more people to opt back into the workforce, which is something that I've always tried to do just, for years. And then to the second part of the question, why main reasons people are not filling requisitions, I think it speaks to skills gap is still an issue in the marketplace. Employers are struggling with finding the qualified, skilled talent to meet the demand. We are seeing some employers are requiring people to come back into the office. And, I would say to employers, trying to stay flexible, offering people remote work, virtual work, can sometimes open up a larger labor pool for you to get those jobs filled, if you're not requiring them to be in a certain location and back in the office, every single day. But still a competitive job market. Companies have to stay focused on retention strategies, engagement strategies, and then I think offering flexibility can really help you in holding on to your staff.
Another thing here, the higher cost of capital continue, obviously, with having interest rates still at a high point at this point. We know that there's a possibility, come several months from now, that could start to change. But just as far as companies go, I know you mentioned upskilling. Thoughts around that and just ways companies are trying to deal with this, knowing there's still, quite a high cost for capital.
Yeah, no, it's a great question. And we, as we look at where companies are investing, certainly we hear, engagement, retention strategies. And one of the ways they definitely can do that is to focus on corporate training and development and upskilling. I do think companies are faced with challenges today with the high cost of capital. And unfortunately, I think we all thought before last Friday's job report that maybe the Federal Reserve would start to lower, interest rates in March, which then could start to free up, some capital, certainly coming back, into investing, in businesses. Based on where we're at right now, I do think that, everything you hear or read or listen to says the Fed probably is going to leave rates where they're at because of the strength of the employment market right now. And we won't see a reduction before May or June. And so if that's the case, capital will remain, a little bit tighter. And companies are going to have to get creative and think of ways that they can still offer, training and upskilling opportunities. And maybe it's through mentor programs and different things that they can do in their organization. But investing in talent is one of the most important things that employers should be thinking about, holding on to their talent and making sure they retain them, keeping them engaged, and then finding ways to invest and grow and develop them for the jobs, certainly that are going to be required in the future.
Understood, Joni. Well, we appreciate it. We've gotten through our time here. We keep it around 15 minutes or so. We appreciate the questions that came in and the comments as well. And of course, everybody who got a chance to watch the program here. For more, of course, you can look at employbridge.com, and this is going to be posted there on LinkedIn. So if you want to recap it or catch the recap, the video is going to be provided to you right there. Thanks a lot, Joni, for your time. Always a pleasure.
Oh, always a pleasure, Evan. Thanks for hosting, and thanks to everyone who tuned in.